All right, welcome to this educational analysis. We're going to cut right through all the noise about how to build wealth. I mean, forget the get-rich-quick stuff. We're going to look at a simple, really powerful path to building wealth, all based on our research into what actually works over the long haul. Okay, so let's just start with this question right here, because how you answer this can pretty much define your entire financial future. Do you see investing as a casino? A game of chance with big, flashy wins and just devastating losses? Or is it more like a garden, something you plant, you tend to it patiently, and you know that with time and care, it's going to grow into something really substantial?
So first, let's talk about a huge mistake our research points to over and over again. This powerful, almost magnetic pull toward quick and easy money. It's a trap that is so easy to fall into, especially when you're seeing headlines about overnight millionaires.
And this slide really breaks it down, right? The two completely different mindsets we see in investing. On one side, you've got the gambler. They're all about emotion, chasing the latest hype, and then panic selling when things get scary. But on the other side, you have the consistent investor. They're calm, they're disciplined, and they're not focused on the next big thing. They're focused on the next decade. I mean, you've seen this play out time and time again, right? Just look at history. Remember the dot-com bubble or the whole meme stock frenzy? What about all the crypto booms and busts? These trends, they make a ton of noise. And yeah, they create a few lottery-like winners. But the data shows the folks who really succeed are the consistent ones, the ones in broad market ETFs who just ignore all the drama and keep on investing. So, if chasing trends and gambling on all that hype is a trap, what is the actual, reliable way to build wealth? Well, it's a lot less complicated than you probably think. And that brings us to the core truth. Building wealth isn't about cracking some secret code or finding a winning lottery ticket. No, it's about committing to a system. It's a discipline. It's about showing up month after month and just letting a proven process do all the heavy lifting for you. And this right here is the magic word our research points to. Consistency. It's not about one brilliant, revolutionary decision you make. It's about the simple, almost boring repetition of making those small, regular investments. That's the real engine of wealth creation. So, how do you actually turn this into a strategy you can use? Well, the great news is that anyone, and I really mean anyone, can put this into action. You don't need a fancy finance degree or some secret inside information. Yeah. Our analysis shows it all boils down to this incredibly simple three-step process. First, invest regularly. Just set it and forget it. Automate it. Second, buy a diversified, low-cost ETF, something like VOO, which just holds the 500 biggest companies in the US. And third, and this is the hardest part for most people, do nothing. You just let time and the absolute magic of compounding do all the work. And look, this is why this strategy is so powerful. You're not trying to be a genius and pick the one winning stock out of thousands. Nope. You are simply betting on the long-term growth of the entire US market, which has a track record of delivering strong returns for the last 100 years. Okay, but I know exactly what you're thinking. What about those terrifying market crashes? What about the biggest fear people have when it comes to investing? Let's just tackle that head on. If you look back at the data, the pattern is just crystal clear. It doesn't matter if it was the dot-com crash, the Great Recession, or that sudden COVID crash in 2020, the story is always the same. You get a sharp, scary drop, and then it's followed by a full recovery and a surge to new all-time highs. Crashes feel permanent when you're in them, but history shows they're just temporary dips on a long road up. And here is the huge mindset shift. For a consistent investor, a market downturn isn't a reason to panic and sell. It's a sale. It's a Black Friday for stocks. Every single dollar you invest during a crash buys you more shares than it did the month before. You're literally getting the best companies in the world at a discount. Okay, enough with the theory. Let's make this real. Let's look at the actual numbers and see how this simple, consistent approach can turn into truly significant, life-changing wealth. So let's imagine you start with just this much, $500 a month. That's about what a daily coffee and lunch costs for many people. So what happens when you invest that consistently? You stick with that for 40 years, and that $500 a month turns into this,
over $2 million. Now, that's assuming a 9% average annual return, which lines up with the historical data. That is the unbelievable power of consistency and compounding working together. And this chart, wow, this just lays it all out. This is exactly how normal people become millionaires. It is not lottery money. It's not about timing the market perfectly. It is the boring, disciplined, automatic habit of investing month after month, year after year. Look, even just $100 a month can grow into a small fortune.
So after everything we've looked at, what is the big takeaway? I mean, what if we could boil this entire thing down to its absolute essence? It really just comes down to these three words: consistency, vol, time. Look, it's not flashy, it's not going to make you a millionaire overnight, but every bit of evidence shows that this simple philosophy is the most proven, reliable path to building real, long-term wealth. So, if you want more of these straightforward explainers that just cut through the hype and actually help you build your financial knowledge, make sure you subscribe. We'll see you in the next one.